Good morning, good morning, good morning, everybody. It is just off 5 a.m. over on the East Coast, and it is Quad Witching OPEX Friday. The fuckery has been fuckery-ish. Today, nothing, absolutely nothing. You got U.S. industrial production when the U.S. doesn't make anything because it's a service-based economy. So absolutely useless information at 9:15. And at 10 o'clock, you get the University of Michigan sentiment preliminary guesswork. Dude, let me tell you, man, the fuckery has been around all week. First of all, let's just start here. Your trade for today on the spreads is already in the room. It was in there at 4:46 in the morning. For those of you with interactive brokers, obviously you can take advantage of this. Those of you that don't have interactive brokers need to wait until at least an hour before the market opens if you have access to it, or until that opening bell. Buy the 45.10 calls, sell the 45.05 calls. Why? Because you are closing red today. You are closing red today. So, yeah. Risk trades, hell of a payout, man. $4, 250, 47.70, 47.75s, 44.95, 44.90s. Hell of a payout when you're getting a risk trade like that. Didn't work. Had to get rolled. Or just had to take the gamble, do what it was. Safe trade showed up. We made it to 45.11.99. Plus 1% was 12 cents above that. 45.12.11. Didn't hit it. Safe edge, 45.14.09. Didn't hit it. You know, CPI came in hot. We missed. PPI came in hot. The ECB raises rates. And here you are. Let me, you know what? I'm just going to make it easy here because I don't want to mess around. And everybody's a little bit perturbed because of yesterday. I'll bring over, wrong one, dude. Wrong one. Here you go. I'll bring over my big charts from on my other screen. Here's your Nikkei. Fucking exploded. Way overbought. And this is your 4 hour we're looking at. Here's the FTSE on the 1 hour. Extreme. Doesn't matter. DAX. Yeah, baby, let's go. Let's gap up. Back up above the 50-day moving average. Way up into overbought over on the DAX. Now we're going to have to scroll around a little bit. Here's your Dow Jones 1 hour, 4 hour. Neutral, flat. SPX 4 hour. Neutral, negative, flat. Show you something on the SPX in a second here. And here's your NASDAQ. I mean, look at this, man. Look at these 4 hour candles. Look at them going fucking nowhere. And here we are back again, right at that resistance area. And again, you don't need to be a rocket scientist looking at this 4 hour RSI to say, nah, man, this ain't cool. And here's your gasoline prices going up with your crude, pushing above that 89.18, up at 91, and still due to be heading to 93. Well, scroll you around on the next one's euro dollar, getting a little bit of a bounce on the euro dollar after it got smashed on the ECB rate hike yesterday. Hong Kong, nobody cares about China anymore. Bitcoin, holding back above that 26 after that big sell down last week. Ethereum, same thing. Here's your DXY, your dollar. This should be scaring the absolute shit out of tech. It's not. And here's your hello, we're coming for you. Here is your US dollar, Japanese yen, up above that 1998 high, 147.65, pushing to last week's highs, which was scaring the shit out of everybody. But it doesn't matter because it's OPEX. Gold hit that bottom, big buy alarm on gold. TLT just getting wasted. And the trannies, nobody cares about the trannies anymore because everybody got rid of their Bud Light. So anyway, I will zoom this out and I will show you guys how to make one of these so you can maximize your screen after we made the move. So Rambling on, apologies. Yeah, again, we went nowhere. And like I had said yesterday before we went into the open, we are closing red today. I've already marked it out red. We are closing red today, meaning we are closing below 450510. Where we close below 450510 on the SPX, I can't tell you yet. It's 5 o'clock in the morning. But we are closing below 450510 today. For the month of September, granted, it's only 2 weeks. And it's not even 2 weeks, it's 10 days because we had that holiday. Nothing. I mean, look at this. Nothing. 110 points. 110-point range on the month. Now, what we don't want, okay, we being collectively as a group, we do not want this to close below 44.81. We do not want a red week. We don't want a close below 44.81. So, meaning to say, we want a close below 45.05 and above 44.81. And the algorithm very well should have that already programmed in. So, Iron Condor, definitely the look right there. It is going to be a risk trade, but I'll put it together. I'll put it over there in the spread. Below 45.05, above 44.81. Range, shit. Absolute shit. Absolute shit. Shit range. Shit range. 27, 25, 22, 30, 25. Yesterday was the biggest day. The biggest, other than that sell off there on September 6th. 33 points. QQQ. Now, because of this fookery, because of quad OPEX, again, well below that 380.40, although we did push up against it, your September dip 374.67 is, for now, dividend or no dividend, is your primary number one focus point for the downside. Until you're below 374.67, there is absolutely no purpose in looking at anything lower than that until we can get some confirmations. So bring it onto the charts real quick, and this is what I wanted to show you. Okay, here's your VIX. VIX made it to 1268. Let's go out here in 90 days. New, not 52 week, not year to date. Here's your 3-year. New 3-year lows. Let's go out a little bit further. New, not new. Oh, not new. We're not below the COVID lows. Right over here, 1142, way back in November of 2019. Let's go on 5 years. Yep, you're sitting there, 1103, way down here, way down back in April of 2019. And we are down here, as you saw, 1268. We have a history of the VIX getting crushed on Fridays, selling the VIX off and selling it down and selling it down further. I have absolutely zero clue how you can sell this VIX down. I don't. So therefore, I decided to get into the calls for December. Purpose for those calls was because there is an insanely large open interest on the 35 calls out in December. Incredibly massive. And there's already people discussing how there's somebody out there who's buying the VIX 180 calls for the early part of next year. VIX 180. Just let that sink in a little bit. So here's the SPX, okay? Now, you guys wasted 10 minutes of your day. Apologies for that, but you were taking a shit listening to this and watching it half of that time. Here is your trend line coming off of the recent highs from back here in July, year-to-date highs, and the recent high that we posted there, right there on September 1. Coming on that trend line, we're right up here. We're right up on that trend line. And I am not a trend line guy. But there's times when you need to point these things out so that people can understand and you can understand where you're at. Right here in white, this is a trend line, okay, coming off of your December of 2022 highs when we made it up to 4,100 and the February of 2023 highs where we peaked at 41.95 and sold off. Both just so happened to be FOMC highs. This is the highs. And here we are trolling above those highs, okay? And this line over here in green, this is your rally wedge support line. This is your March low and your May low right down here. So we're in this window, this 100-point window of 45.20-ish and 44.20-ish. And we have gone absolutely nowhere for the month of September. September has been nothing. This is September. No, this is not. Let me just screw this around real quick. This is your 5-day. So I will customize it. Apologies for technical difficulties, but they do tend to happen on Fridays, which is why I don't like to trade on Fridays. I'll be doing one-on-one calls today if anybody wants to. Ah, I was right. My bad. Here's your September. This is September. We've gone nowhere. And gray, that's just for your OPEX. This is where we're at. Well, I mean, we're literally nothing. And again, because of how you have your problems with your gaps, bring it on, 550. We gapped above the 10 and the 50 yesterday because that's the only way that you can get past it is by gapping up above it. So we gapped up above that problem, and here we are where we are. So anyway, we are closing red today. ARM IPO absolutely exploded after hours. This was your after hours close at 63.59. You're up here at 70.59. The Kool-Aid is ice cold. And here's your QQQ for the week. We went right back up to that 378.51 pivot. You have your dividend and your little dip. Adjusted close is 377.27. We are at 376.82. So we are fractionally down over on the QQQ. Wider view. Again, from where we bounced. We came up here. This was our bounce. And here we are trolling, doing absolutely nothing other than your OPEX week. So it's quad witching OPEX. Quad witching OPEX is worse than a regular OPEX. And here we are. It's Friday. You want to trade? By all means, there is going to be trades to be made. If you are hurting because you decided to get into the trade yesterday and it didn't work out with the risk, that's why we call it risk, and this is why they call it quad witching OPEX. Now, for those that are getting beat up because they're in those further dated, not further dated, but the September 22 QQQ puts that didn't take it off when we got our dip back here at the end of August, or over here when we got the dip over in July 7th, which is more appropriate for the discussion that we're talking about. They're September 22s. So you've still got a week. It's very obvious that when I made out the trade, I'm taking the 22s because I'm moving. I might not be able to manage the 29s. I'm not sure, but I'm not taking the chance. But it's why we've been talking about the October 6th. Going out into October 6th, you've got both the United Auto Workers strike. You have also the government shutdown. You have also the end of the quarter. You have also the mystifying discussion that's already well known around all of Wall Street of that very large loan that's very close to coming to maturity, which is 130% of that bank's assets. We're tick-tocking on the dance floor, not for the end of the world, but for a very, very great dip that we can buy. Catch you guys in the chat room. Looking real quickly here at the daily, which I threw out earlier on my one screen and saved it. Again, you can see this wedge that we're in right there at 45.15 and right there at 44.65. Not yet totally overbought, but we're getting close. Just now starting to get some fractionally looking better than normal MACD and stochastics. But that's why I pointed out to you in the email constantly, it's all about your VIX. If your VIX can't hold that 1451, bears are not in control. And once you lose that 14, bears have lost control completely. And that's what's happened here over the last 2 days. So how they're going to drop this any further, I don't see it. I don't see it. But I got 2 eyes and the market's open at 9:30, so we'll see what we get. Have a good morning, guys.